Good morning, afternoon or evening, ladies and gentlemen. Welcome back on this wonderful Wednesday for another jam-packed daily market update. Today, of course, is an important day as the Federal Reserve is set to lower interest rates by 25 basis points. For me, that isn't what's important. What's more important is what they are going to project moving forwards. I'm going to talk about that. Markets had a little bit of an uptick yesterday. In the scheme of the pullback that we've had, it's not a magnificent rally. It's something, and I think this probably had a lot to do with what Kevin Hassett, who is, in my opinion, going to be the next federal chair, whether that's what Polymarkets has him as in regards to probabilities of him becoming chair, or whether that's Trump effectively hinting at it when Michael Dell, of course, made his announcement. And everyone was rather rude about an individual's wife who was giving $6 billion to the people of America. Isn't that just human nature? So we are going to be predominantly focusing on that. The markets are stalling a little bit today. The stock market very flat, but it's at an interesting level. You know, your stock market from here, certainly the S&P, goes on to all-time highs, or it double tops and there's a longer correction. Jerome Powell is going to be, and by longer correction I mean more in the short term, we're very bullish on the S&P. We think that it is in a new bull market, having had a bear market earlier this year. Jerome Powell today is going to be very pivotal, and there's a lot going on. You also have Christine Lagarde speaking today. I'll run you through everything. We'll refresh you guys on why interest rate cuts are important. And actually, are we going to get the path that's laid out? If you look at the dot plot, I think the last one came out on the 17th of December, has rates about 3% next year. That's in line with the Fed watch, tool from the CME. I think there's room for more cutting, and what Hassett had to say yesterday was perhaps telling in regards to that. You know, Hassett, more fiscal room to do more stimulative things now. And I think that's on weakening data. I'll explain why all this is important in regards to the business cycles, the business cycle relation with the sort of altcoin sector. We'll look at it through the lens of total 2. We need to see that breadth in markets, and that's only going to come from monetary policy. It really is remarkable just how influential the central banks are to the entire world. You know, they really are the great manipulator, as it were. I'll show you the IWM chart, the Russell 2000 and Bitcoin. Now that's at new all-time highs. It's another bit of confluence in regards to our bullish thesis on the markets in 2026. The Fed's going to play a major role in that. And then we'll finish things off. You know, the Central Bank of Europe talking about a digital CBDC or digital euro, which doesn't run on distributed ledgers. We've actually spoke to and interviewed a number of central bankers from European central banks. Those are on YouTube. We're very lucky to have done that. But the Swiss National Bank has now rejected a CBDC for fears of it being too intrusive. Of course, here in the UK, we're full steam ahead on it. So a lot to get into, guys. Let's kick things off with this headline from CNBC. It says, European stock heads for negative open as global markets await Fed decision. And it's not just the European stocks. You know, if we take a look at the DAX, which I haven't looked at in a little while, we were very right on the DAX. All our targets for the DAX have been met. You know, this was our big target. You've been consolidating now, which probably, in my opinion, sums up the state of play in regards to the Federal Reserve. You know, this is just a big consolidation range. You've got deviations above and below it. Again, it's not just the US stock market that's on the cusp of either a major breakout or a bit more of a prolonged breakdown. It's the DAX. You know, this is a range that could very easily break to the upside. The Fed's going to have a hand in that. Central banks are going to have a hand in that. I dare not look at how the FTSE looks. The crypto market's a little bit stagnant, as you'd imagine. We'll come on to crypto in just a second. And of course, the US markets aren't open yet, barring the futures. This is your setup for today, guys. So straight into it, 10:55, so 5 minutes to 11 here in the UK. That's GMT. We do have the ECB president speaking. Her forward guidance is also going to be important as the second largest central bank, I believe. Is it the People's Bank of China? It might be the ECB. I would say it was the ECB. Then you have the Bank of Canada's rate decision. You've got the overnight rates also set to stay the same. You've got their press conference. What are they going to say moving forwards? Today's a heavy day of central bankers, which ultimately are the manipulators of basically everything because of how integral money is to our lives. Then at 7, you've got the Fed funds rate decision. Now, the probabilities of this are pretty concrete. The 25 basis point cut is not what I'm interested in. I'm interested in what they say moving forwards that's going to give us clues to how 2026 is going to play out, and thus the crypto markets that are tethered to the macro. JP Morgan actually came out and spoke about that very recently in regards to crypto becoming more of a macro asset. So really, the Fed funds rate decision isn't that important. The FOMC statement's important. The FOMC economic projections are important. And for me, more importantly, Fed budget balance. Okay, we'll talk about that in just a sec. For me, importantly, is the press conference. What are they going to say? Are they going to be hawkish? Are they going to be dovish? And ultimately, how are the markets going to take this? Because the markets more broadly are looking for stimulus. Yes, you've had the stock market go in the direction we thought it would, and crypto generally go in the direction we thought it would. The context of it doing that has been under really a rolling recession and a lack of a business cycle playing out due to monetary policy. And that is ultimately why this is so important. You know, we can explain all of this. We do this for a living, so I don't expect everybody to understand to a high degree, but we can hopefully simplify it. Here we've got the US PMIs, which just quickly, if we put our total 2 on, which is the altcoin market, moves in tandem with the altcoin sector. You know, even if you look back here, you can see the PMIs are a driver, or the things that drive the PMIs drive markets more broadly. And we'll show you that is central banks. Every time they ease, it spurs on a PMI cycle. And that's what they're set to do today. We want them to do it to more of a degree. That's going to be more of a kind of bullish macro environment, which we have merit for. You know, if we look at the IWM, every time this is broken out into a new all-time high, you typically go on and continue. We've got courses in our Patrons. We look at cup and handles and patterns like this. But if this is, we've got the IWM, the Russell 2000, which is a smaller cap stock market, which hasn't done as well as the large caps, which have really led markets. There's been a real concentration. And this, of course, is Bitcoin. Every time you break out into a new all-time high, Bitcoin goes on a major rally. We think that's ahead of us today. We've got lots of other macro reason. Back to the PMIs. Every time I'm hopefully very quickly there, I've convinced everybody that the altcoin market moves with the PMIs, markets more broadly. Every time the Fed cut rates, it spurs on a rally even on the smaller time frames, it spurs on a rally in the PMI cycle. And they're set to do that. To what degree is really the question. And markets are going to project that. I think gold's move, certainly up to the sort of 4,000 mark, has actually been on them. Markets are forward looking. If you look at Ray Dalio's piece stimulating into a bubble, are we in a bubble? Are we not? Is for debate. I don't think we're in a tech bubble. I think people have been calling for a tech bubble since the dot-com crash. I think if you think AI is in a bubble, you don't understand AI. But are we? You know, he effectively puts forward there the idea that financial assets are going to do well. Gold's going to do well on what's coming in regards to the Federal Reserve. And today is going to be telling in regards to whether we get that. So you can go as far back as you want. Every time they lower rates, it spurs on the PMI going up, even here on the shorter time frames. And that's the projection that they're looking to set. And Jerome Powell's going to set the pace for that today. So it's very important. The market saw a little bit of an uptick yesterday. Of course, your probabilities of the next Fed chair are very much in favour of Hassett, not Waller, who would have been the second favour of the St. Louis Fed. I think Hassett is very likely. 51%. Trump basically shouted him out. Here's some comments from him just yesterday. Hassett, more fiscal room to do more stimulative things. Now, Hassett will be reconciliating the bill next year. A lot of stuff people have for the bill, like housing, and that's more of a breadth in regards to economy. These sectors have suffered, and they certainly haven't seen the kind of momentum that the tech sector has, which has largely led the markets. This is from Walter Bloomberg. Fed may cut rates and boost purchases. The Fed is expected to cut rates by 25 basis points Wednesday. Bank of America predicts an extra move. $45 billion in monthly short-term treasury bills to maintain bank reserves and prevent liquidity issues. Combined with MBS reinvestments, total bill purchases could reach $60 billion this month. These reserve management purchases aren't QE. They are to keep money markets functioning, not stimulate lending. While critics may see it as money printing, the move could reassure markets amid rising treasury issuance and concerns about tightening liquidity. Yes, there is a need for the Fed to tighten. If you look at the SOFR, we've done a lot of this. This is sort of plumbing of the financial system that ultimately indirectly affects all our lives, that is almost deliberately complex to understand. But we try and break it down. So it's not QE in the... It is and it isn't QE. It is QE, really, broadly. They are printing money and putting it into the economy to prevent liquidity issues. $60 billion, they need to do a lot more than that. Are we going to see a real QE or not? We'll see. Jerome Powell has perhaps signalled it. So just coming back to this chart, because it's important. We've not really seen anybody else cover this. IWM literally is on the cusp of breaking out into new all-time highs or putting in a new local high and then continuing. And we think it's got certainly a target to the 300 plus zone ahead of it. This has typically spurred Bitcoin on. We've got that potentially easing Fed. Bitcoin still hanging in there. It needs to do more for me, in my opinion. The pullback that we've had, what now could be deemed dead cat bounce hasn't been to the same magnitude. You want to start to see your recent pullback, which is all I believe this is engulfed. The reason I think this is not just because Bitcoin's still technically in a good place. We think we've got that macro backdrop. I do think if you look at the total as well, this is just literally consolidating in and around all-time highs. And today's going to be important. I do think you've got a bit of a falling wedge here for the total. You want to learn what falling wedges are? Do become a patron. Do the course. 3 impulses within this wedge: breakout, retest, consolidation. You could really rally here, I think. It's all going to depend on Jerome Powell today, in my opinion. But the fact on the macro that you've just pulled back in and around all-time highs, when there's a reassertion, you're looking at price discovery for crypto as the higher beta of markets. I'm a bull. What Jerome Powell says today is going to be very telling. We shall see. Of course, we'll be reporting on everything tomorrow morning for you. So don't forget to become a subscriber. Lastly, the digital euro is the next step for our money. Now, this is kind of a retail application. This isn't on distributed ledgers. One of the biggest misconceptions, and I actually spoke to central bankers about this. I've even got videos of them saying it. It's not on DLT. They are doing things with, most central banks are doing wholesale CBDCs with DLTs in regards to tokenization, but this is not on DLTs. It's a total misconception that this is on distributed ledgers. Yes, I know people link certain things and say this, that, and the other, but I've literally got that from central bankers' mouths themselves and got it on video, and multiple of them. I've had the pleasure of speaking to the ECB, multiple central banks. So this says, and it is our integral to strengthening our strategic autonomy in the digital age. Executive Board of Members Piero Cipollone and EU Commissioner something explain why Europe needs the digital euro. He was actually on the board of Algorand, I think, or did something on Algorand. Individual highlighting here that the Swiss National Bank's actually rejected retail CBDC to prevent massive bank disintermediation and direct state control over citizens. It's coming, I'm afraid. This digital world is intrusive inherently. I think that's why you're seeing Zcash and other things as a kind of vote for privacy. Be careful. I also think there's a lot of market manipulation in regards to Zcash personally. As somebody that gets to see behind the veil, often these random rallies and narratives around certain coins aren't... Zcash has been around a long time. All of a sudden it gets a bid and all these heroes are created around it, and kind of narrative propagators. To me, usually there's some sort of VC or backing or broader plan there. I've seen behind the curtain. I'm not saying that this is the case with VChain. Just be careful, it could be. I've seen behind the curtain, and I know just how manipulative this industry can be. Yeah. We'll leave that there. So, big day today. I'm going to love and leave you on that note. I'll see everyone in tomorrow's daily market update. Of course, we'll be reporting on what the markets did post the Fed. It's all about the Fed at the moment. And it always has been. And I think A thought to leave you on. I like to be a little bit of a contrarian as far as the markets are concerned. Everyone talks about the debt. And including many of you that are watching this, and how the debt is a real concern. Why is debt a concern in terms of, US government debt? Why is it a concern? The only concern for me is that it inflates money, which inflates your purchasing power. That's the game. And you can arbitrage that with owning assets. So actually, the debt is good for me as somebody that owns assets. It's great for me as somebody that owns assets because I get richer and richer, because I not only keep up with the money supply, can actually outpace it if I'm in the right assets. That's why this whole channel exists, is to help people understand that and to potentially do it if they choose to. We don't give financial advice here. But I don't understand. Everybody cites the debt, and it's kind of like, why? Why is it an issue? Maybe I'm being stupid here. Let me know in the comment section. What do you think? Why is having, let's say, $40 trillion in debt an issue? Because it would be an issue for us. If I had that much debt, that would be a problem. Certainly in regards to if I was running a deficit and things like this. On a personal level, it's a problem. On a national level, is it a problem? I don't know. I'll leave you on that thought. See you all in tomorrow's Daily Market Update.